So, risk of trial failure, how big of a risk is that? How should investors be thinking about it?
Well, we've got, unfortunately, a really good example in Celldex, a company that was working on therapy for brain cancer, glioblastoma, that at one point was very promising, but unfortunately, just recently, the company announced that it's going to have to discontinue its study because, sure enough, a late stage trial will not outperform placebo.
Yeah, that was a huge disappointment when we saw it in the news. And the stock tanked, what, 50% or so just on that one news item?
Right. This stock is down below $4 now, and this is an extremely, probably a touchy, painful subject for investors who own the stock, given that it was trading around $30 last summer. As recently as the fourth quarter conference call, management seemed encouraged. They were offering up encouraging words. The CEO said that, he believes that, that fundamentally they have a drug that's approvable in this drug, Rintenga. The chief medical officer said that there was the chance that maybe it could get stopped, the trial could get stopped early for success, and it could get to the market sooner rather than later. So, I think what this does is it reminds investors that you can take a drug that looks really, really good in mid-stage trials for a very important indication like brain cancer, where so many people, thousands of people get it. Unfortunately, thousands of people are still dying from it. And that can make you think, wow, they're going to revolutionize this indication, and this is going to be a fantastic investment for me to get involved in. Until the drug clears the phase 3 trials, which is the third stage, you can't assume anything.
Yeah, and especially with cancer medicines. I mean, we know that 90% of medicines fail at some point during clinical trials. That number goes up to 93% when we're talking about cancer.
Cancer is very, very hard to treat and to attack, and medicines that they're developing now are incredibly complex, so we don't fully understand them, especially when they get rolled out into much larger patient populations. In phase 3, this trial had 745 participants in it. Anything can and sometimes does happen. In this case, it wasn't necessarily a failure of Rentiga. It was a better than expected outcome for the people who were taking the control arm or the placebo group. In past trials, the placebo group didn't perform nearly as well as they did in this phase 3 trial. So, it's hard to say that Rintego is a complete failure. But that being said, the company has halted development of the drug. And, that basically leaves investors saying, okay, well, what could happen next for the company?
So it seems like there might still be a little bit of promise in this company. Do you think that falls into Rentega, or do they have any other assets to fall back on?
I think you got to consider Rentega as basically, gone for now. I don't think unless they can do some retroactive analysis that allows them to figure out how to run another trial. I don't see any more development of that drug. They do have two other drugs, though, that are interesting. One will shorten the names because, as we all know, the names are hard to pronounce in biotech, the generic names. But one is Glemba and the other is Varley. And these are both monoclonal antibodies that are under development in mid and late stage trials for cancer. Results from both trials could start rolling out to investors either later this year or in 2017. So there are some catalysts that could re-energize the stock price. However, as we saw with Rintega, there's still a lot of risk here. I mean, if neither of these trials pan out, then you got to look at other trials in development. That being said, the market cap is far lower today than it was a month ago. They do have a pretty good amount of cash on hand. It should get them through 2017.